So we are in conversation with Vishal Kampani of JM Financials right ahead of the India conference, which kickstarts next week. Almost 200 funds, 300 corporates. So it's going to be a very busy week. So we thought of catching up with him right ahead of the conference. Vishal, always enjoy our conversations. Thank you very much for your time today.
Thank you.
So Vishal, we are having this chat today in a very amazing environment in the market. Now, globally, there are talks of almost 250, 275 basis point rate cut in US, triggered by mid of next year. People are expecting the trajectory, if not the quantum, would happen here in India as well. And there's a global risk on which is happening. Do you think this inflation issues market is, moved beyond it now?
That's a great question. I think if you go back to last year, no one frankly expected that rates would be higher for this long. And a similar feeling was there sometime around June, July, that there would be a faster rate cut, and that did not materialize. Having said that, in the last 6 quarters or so, the US economy was still expanding, right? Despite higher rates, you could see very strong sort of employment, and you were not seeing the consumer slowing down. But if you see the last couple of weeks, there is a very distinct feeling, and the data supporting it very strongly, that there is a slowdown which is very, very visible now. And I think that is raising hopes for a large sort of rate cut. Personally, I don't anticipate that the rate cut will be as deep, and it'll be down to 200, 250 basis points. I think the revision in rates downwards will take a longer time, but I think the direction seems to be set that you won't have too many further increases. And 6 months to 9 months from now, sometime in July or August next year, there could be a very, very clear, distinct change in the talk, the body language, which is supporting the current rally that you see.
So Vishal, while in the last few quarters, I would say US struggling, many parts of Europe, we all know what's happening in China, but India has demonstrated good strength as far as the macros are concerned, economy is concerned, and even the quarter gone by, if the earnings season is any example. How are you reading the strength of the economy? You speak to the top corporates all the time, and the earnings season which went by, any sign which you picked up?
Yeah, so I think just a bit of past, I think India went through a deleveraging cycle because of ILFS, the big event, the real estate credit crisis, right? So we went through a bit of deleveraging. We went through a cleanup in terms of almost 5 lakh, 6 lakh crore of assets being sold on the wholesale side from wholesale portfolios of banks. A lot of those assets went to good corporate houses. Brownfield expansions were done, and they were very profitable assets. So India was dealing with, was having low leverage and not dealing with a leverage crisis domestically when COVID hit us. Secondly, I think the government behaved exceptionally prudently, right? They did not give any sort of freebies, right? There was literally very low error in their planning, right? Giving a guarantee scheme which never got used but gave confidence back to SMEs, right? To smaller corporates. And also India consumer leverage is very low. Secondly, India has very low external debt, right? So all of these factors push and put India into a position where I think it's one of the most attractive markets. And when you see growth at 6-7% and now at a high base, right? 10 years back, people would say, oh, India would grow at 6-7%. But 10 years back, the GDP was very different from where it is today. So I think if you ask me, the 2 most attractive markets in the world where any investor would allocate their capital would be the US and India, undoubtedly. Today, the way you see it. There's stability. I'm very confident that our Prime Minister will come back even more victorious next year.
Excellent. Let's scratch that point a little more, because when we speak to a lot of market participants across the world, I was in London recently speaking with some funds, and 90% of the conversations were around political, how things can shape up. What are your thoughts on state elections? Market was jittery.
Sure.
Now they are pricing in maybe 1 or 2 states in BJP's favor. The popular narrative among the market community is that Mr. Modi will come back. But if we just analyze the work done and the momentum, what are your thoughts? You're very confident that he'll return with the thumping majority?
Yeah, I think I'm very confident, and I'm even gutsy enough to put it out that I think he'll come back with a thumping majority. I think he will do even better than what he's done in the last election. I also think that most people feel that the Indian voter is a very dumb voter. And I don't think he's really a dumb voter. He's actually a pretty smart voter. He knows what he wants locally, and he may choose what he wants locally. But he also knows that Modi is the best thing for our country today.
Is that in the price yet, stock market wise, or not yet?
No. I think he comes back with a thumping majority, and India will see the mother of all bull markets next 5 years it's ever seen.
Excellent. Let's talk about what is corporate India telling you. You are part of some of the biggest and all sectors, the boardrooms talk and all of that. On earnings trajectory, on growth, on top line growth, what are you getting?
So today across the board, you see positive vibes from all corporates across sectors. And see, I said this in one of my interviews a couple of years back that India used to be a market where a few industries did well for a few years and then it moved to other industries. And now the way we are seeing business, look at our own case, right? When I looked at my pipeline 10, 15 years back, I would tell my team, okay, this year focus on IT. Okay. Or, next 2-3 years, you're going to see great momentum in pharma, right? But today when we see every single sector, we are seeing corporates discussing growth.
The breadth of recovery, are you indicating, is very strong?
Breadth is very strong, and people feel that India really has a global position. See, if you're only relying on a part of a country or a part of a sector, a part of an economy, then you will not see breadth grow. India is really now major part of the global economy, and you're seeing that in corporate aspirations.
Fair point. Because obviously a lot of your clientele up till now were major India players. Yeah. But now their global play is going up.
No, absolutely correct. And it's not, we see startup companies who've successfully launched, even if they are kind of Me Too businesses in the US, they're operating those Me Too businesses at 1/10 the cost of the US in India. And they're taking those models to Southeast Asia, Middle East, Africa, so many countries and growing.
So growth and earnings doesn't seem to be an issue at this juncture when the feedback you're getting from your corporate.
Yeah, see, I'll tell you, of course, the markets are a big fan of earnings, right?
Yes.
But markets look at earnings from a very short-term perspective. How's this quarter, next quarter, or a year and 2 years, right? Because all research reports are, focused on that quarterly earnings momentum or 2 years. But I think the real growth in India is going to come from top-line growth over the next 3 to 4 years. See, earnings can always fluctuate, right? You may have some, issues in terms of rates going up. If you're a financials company, right, rates are going up, you're going to squeeze your margins. But credit growth in the country is expanding at 15+%, and it's going to keep doing that over the next 5 years.
So that's the right way to look at growth.
Absolutely. I think you look at peak to peak, India's expanded very, very well. And if GDP is going to grow at 6 to 7%, good corporations will be growing their earnings in the teens over the next 5 years or 7 years. Now we look around the world, barring the US, barring India, and maybe barring some companies, say in China, right? There are very few countries that offer broad-based sectors, lots of choice, lots of breadth, many companies who are all telling you we'll be growing our revenues in the teens for the foreseeable future.
So one is good earnings and then durability and longevity of the earnings.
Absolutely. No, this is more revenues. Earnings can fluctuate, and earnings will create that volatility in the market. But if you tell me today, okay, Nifty is almost 20,000, where is Nifty going to be, say, 4 years down the line, right? So Nifty will grow. Nifty will grow. Okay, Nifty may not have performed in the last 2 years or 1 year. That could be because the earnings growth in Nifty companies could have been limited, but revenue growth is clearly visible.
Sure.
Are you seeing revenue growth slow down? No, you're not. So I think you will see that expansion with breadth. You'll see that expansion also in the core indexes.
Okay, so let's talk about, since you brought up Nifty, what are your thoughts on valuations of the market on aggregate, and maybe mid cap, small cap versus the large cap basket? The argument is mid cap is frothy, small cap is definitely frothy, large cap where the value lies. What are your thoughts on valuations?
Yeah, so I don't disagree that there are certain stocks in the small and mid cap space which would be expensive. But again, it depends on your time horizon, right? See, end of the day, when you're investing, if your time horizon is going to be 1 year, you may find things expensive. If your time horizon is 3 to 4 years, it may not be expensive, especially if you're very confident about growth. But having said that, yes, there are pockets of exuberance that we see in small and mid cap. I'm happy to say that at least we are not seeing that exuberance in the IPOs that we're doing.
Yeah.
And I think a big sort of thank you to that is actually the domestic investor community. They are being extremely disciplined. The mutual funds in India are being very disciplined. They are, really valuing things more fundamentally and not getting carried away. And therefore, we are seeing good sustainable valuations and pricing coming into the IPOs. Large caps, I don't think are overvalued. I think they're fairly valued to you, maybe even some undervalued. I think two of the best plays, for example, if one has to buy, is HDFC Bank and ICICI Bank.
So since we are talking about lenders, and you also have a piece of a lender business in your GM Financial as a company, I want to talk more about it because NBFCs, the entire breadth of NBFCs, there are large consumer-facing NBFCs doing very well. You've done a big QIP also recently among them. Then there is the small finance bank kind of MSME, kind of small ticket borrower NBFCs, which are guiding higher now, 30-35% and raising the guidance. You have a flavor of it in your own company. Do you see tailwinds in NBFC business if the rate cut cycle starts mid next year?
So I think tailwinds and growth are already there. The rate cut cycle will improve profitability.
Yes.
Yeah. So I think growth and tailwinds to growth are very, very present and very visible. And it's quite simple, right? If you see, frankly, if you look at Indian banking system, right? It's not that we've had too many bank licenses which have been issued by RBI for whatever reason, right? I mean, they are the best judge to decide from a macro perspective whether India should have more banks or not. If you ask me, India should have 10 more banks. But they aren't, right? So how do you increase credit penetration into the country, right? You have to have specialized vehicles that go and offer services and products, right, to clients to be able to consume or to be able to build businesses, right, especially smaller businesses. So people have realized that the whole SME space, right, the whole affordable housing space, the whole rural unsecured credit space, the whole urban unsecured credit space, these are all big spaces and they're largely untapped. The example I gave you, look at State Bank of India, ICICI Bank, HDFC Bank, look at some of our biggest lenders, right, Axis, right. All of these are serving the best customers of the country. And they are talking about 15% growth serving the best customers in the country. But the country has a lot many more customers.
Beyond that as well.
Right? That entire growth, right, is going to come from the NBFC sector. But the biggest challenge the NBFC sector is going to face is where is it going to raise their liabilities from? Right? Because if you are going to grow at these rates, most banks I talk to are sort of filled up, like they are at the limit in terms of board approvals, in terms of where their exposure to the NBFC sector can be.
Even a lot of mid-tier NBFCs raise a point to us that, there is kind of a discrepancy in the rates at which bigger NBFCs access funds from banks and the mid-tier. And then, priority sector lending at that rate is not viable for them. So they find it very difficult also. Do you see that's a fair point?
Absolutely fair point, right? See, end of the day, what's happened is, India's corporate bond market is not very deep. It's not very well developed for whatever reasons again, right? I mean, it's a long list of reasons. If I go into, you can have an interview on that. But I'm just saying, so what happens is the depth in that corporate bond market is there for the extremely high quality issuers. Correct. Right? And these changes take a long time, right? Pre-ILFS, there was this big move where a lot of these smaller NBFCs were getting capital market funding. But with that crisis, with a lot of change in regulations in terms of what mutual funds can do, not do, a lot of tax changes that came through debt mutual funds, a lot of the liquidity for mutual funds has dried up, which was fueled at least to a certain section of the NBFC. So NBFCs now have become extremely reliant on bank funding. And if you want to access the public issue of debt, you've got to be highly rated.
That's fine.
A+ rating minimum, right? Insurance companies don't even buy any paper below AA.
Right.
So therefore, there is a big sort of, spread between a AAA, AA to A, and a massive spread if you're in the BBB category. But one thing which can be done, frankly, is RBI agrees at least for some of the larger NBFCs to get deposit licenses, right? End of the day, because at least that allows them to build direct franchises,
Liability.
go out to retail directly and build liability. So it frees up some of the bank capital, some of the capital market capital, which through a structured mechanism can flow into NBFCs, right? So people say, oh, one simple answer is, launch an AIF and AIF can fund NBFCs. But think about who's going to invest in that AIF, right? If I'm a high net worth investor, right? Because, AIFs, you've got to have a minimum size, which is quite large, a crore plus, right? So end of the day, if I'm a HNI investor, I at least want a post-tax return of, say, 9%.
Yeah.
Plus there are fees for the AIF. So when you work that backwards, an AIF needs to basically give you at least 12 to 13% return.
Yeah.
Now, if an AIF is only building a credit portfolio, right? Say there are 10 credits. If one credit goes bad, you need to make much more on the 9. There's no guarantee all 10 are going to perform. So you got to build that loss for one credit into your pricing for all 10. So when you look at the cost of management of the AIF, the post-tax return requirements for an HNI investor or a corporate investor, you look at the gross up for a potential loss in 1 or 2, and the gross up for tax, you're talking about 13-14% rate at which an AIF will give you money. Which makes no sense, and that is exactly the reason why many of these smaller mid-cap NBFCs who have lower net worth, specifically net worths less than 1,000 crores, will find it tough to go out to a bond market, right? And they have to go to the banking system. Yeah? So frankly, I wonder whether, are we trying to make the banking system more efficient, or are we going to make the banking system more lazy by having a lesser number of banks?
Where do you see opportunity? Where do you see risk rewards attractive market maybe missing out on? Last time we spoke about some of the legacy auto companies, which market was not paying attention to, themselves have developed very good skills in EV. Market is only looking at pure play EV at that time. Market was pretty excited. But then I think there was a gap there and it got filled in.
Yeah,
where do you see opportunity?
There's a statement called the empire strikes back.
Yes.
Right? So you're seeing that play out in the two-wheeler space, where you're going to have few sort of startup and few new age sort of companies are going to try and build a two-wheeler EV space. But I think just the value proposition from a servicing standpoint, understanding of India, broad-based, many states, the entire distribution chain, I think the larger sort of two-wheeler companies will be able to build very strong and good products, and they have superior distribution and customer service capabilities. So I think it's not very clear that the startups will be able to beat the incumbents. I mean, we have a recent report which one of our analysts has written, and he's done a lot of good work and research on how he's compared many of these players. Yeah. So I think you guys can have a look at it.
Sure, I would certainly do that.
Yeah.
Vishal, since we are talking about building, you guys have worked very closely with some of the groups which have done very remarkable work on national assets kind of business models, port, infrastructure, the others. And this has not been represented in Indian market before. And it's a very niche area. How do you see the potential of the play, ports as a play overall, next 5-10 years? Because I'm assuming that a lot of global players may be interested in these kind of things.
Yeah, so I'll tell you, in the last decade and a half, we've had a lot of global conversations as an investment bank with a lot of global players who've been keen. But I think it's the local players who've executed better.
Is it?
Yeah. So I think at some point in time, I mean, you may see M&A for maybe single assets, but I think a large part of Indian infrastructure will get built by Indian companies. It will remain with Indian companies for a long period of time, and it'll be built at much lower cost, and it'll be as efficient. So I don't see some immediate trigger, where I see, Indian ports being sold to global players.
Coming back on a bit about markets, Vishal, which end of the sectors are you seeing good valuations, which market may not be pricing it yet?
Well, that's a great question. I think tough one to answer right now. Most sectors that I see are, kind of priced pretty well, I would say that. people do see some value in IT. I'm not very convinced about it. I think we have to wait and watch. A lot of the changes happening in thanks to AI, changes that will happen thanks to advancement in quantum computing, etc., will have, I think, a profound impact.
But you were making a point on IT that the plain vanilla business models versus new age business models. People are taking a differentiated view on IT.
No, they are. All investors are. Absolutely. So if you look at engineering services, tech services, they will command a premium over IT services. Clearly. But I'm saying something different. I'm just saying that, see, what may become cheap today, I think with the changes in technology, may get cheaper tomorrow. It's not necessarily
may get cheaper. So
that it's attractive today, because there could be fundamental changes happening in technology and the way the world is looking at things. Right? Look at, for example, legal services as a sector. Or back-end healthcare infrastructure services as a sector, right? There are some profound technology changes happening, which will completely change the way jobs are created in these sectors. So I think it's very easy to say something is cheap and let me buy it today. It may remain cheap for a very, very long time.
In fact, data shows that the hiring itself for a lot of IT-backed companies have taken off the cliff.
Yeah, exactly.
Campus visits. I want to talk about one sector, Vishal. There are part of that sector you guys have looked at very closely, the power space. The entire value chain of power, right from generation companies, the legacy generation, the renewable, the power transmission, power financiers, wires and cables were never considered a category in India. It has emerged as a massive category, good growth. How do you see that space?
So I'm not an expert on that space, but yeah, generally I think quite positive. Okay. An interesting data point I hear is that China is building the largest power capacity in the world, that it's ever built, and this is not just in solar or renewable. They're also building crazy amount of coal capacity. I don't know why they're doing it, but they are. So there is obviously a high need for energy, which China is planning for itself, and the same thing is true for India, right? I mean, you want to create a lot of data centers, you're going to need power.
Sure.
So I think generally the sector is seeing good tailwinds, but I'm not an expert stock picker.
Sure, no problem. We'll wind it up with a quick winding up question on the market and economy. Next year, at the same time, when we are having this conversation around your conference, do you think markets will be reasonably higher from here? What's the outlook on returns expectation? Should we moderate our return expectations, or you think there's no urgent need, market is not frothy, no bubble-like, and earnings trajectory is okay, market can be reasonably higher?
No, I think, it's become a sharp stock picker's market now. You can't buy anything and everything and just make money. You have to be smart at picking stocks. But coming to a pointed response, I think next year we will have PM Modi back with a big bang, and that's going to be a great positive outcome for India. Next year, same time, we are going to be discussing the US elections, which will be weighing on the global economy, not just on India. But if you give me a year's view, there is still a lot of room to make good money in the markets. No one should shy away.
Wow, that's a great point. But since you track Mr. Modi very closely, even out of curiosity, out of 9 years of Modi government, and people are, even calling it the Modi bull run here, because 2013 lows, the market has actually started running up. Then close watchers also say, even if he comes back, assume he comes back in a good majority, where is the scope for further reforms? Which are the areas which should be taken up? Power is already done. A lot of work on road infrastructure stuff is done. From business angles, where do you see, the incremental reform would be taken in areas, or you would like them to see?
So I'll tell you, huge amount of reform, in my view, is required in the banking and financial services space. As I said, India needs 10 more banks, right? Why should insurance companies be restricted not to lend to companies below the rating of AA, right? Why should further expansion not done in terms of equity ownership with pension funds, right? If you had expanded more ownership in pension funds for equity 10 years ago, when India was even cheaper, right, their portfolios would have been even stronger and better today.
And long-term money would have come in much earlier.
Absolutely, right. An NBFC can lend to a customer or a promoter at 2 times cover of his shares, right? But a mutual fund needs 4 times cover. So there are 2 different regulators who have different views on how entities that are actually governed by them need to look at a product very differently. So regulators should talk to each other. And I think the biggest reform in the next 5 years that can be done should be in the banking and financial services sector.
But
right?
at least a lot of renewable-related global debt is being raised now. There is some work done. A lot of renewable-related.
Yeah, but the pricing on the debt's not very different. What you're doing is you're accessing a different pool of capital. Most corporates we are talking to, they're saying the pricing on the debt is almost the same, right? So if a Tata Steel or JSW wants to raise a normal bond versus a renewable bond, the pricing is not very different. It's the allocation of investors which is forcing you to create a structure in a bond that you can go and access that pool of capital.
But the rate differential is not there. That has to be there.
Not much. Not much. Yeah.
All right, Vishal, always enjoy our conversations. Thank you very much.
Thank you.
It could go on and on, but we have to take a half-hour break. So thank you very much for your time today.
Pleasure to host you.
Great. Have a great conference.
Thank you.